Location, location, location. That is a phrase that's commonly associated with real estate investing. So in this module, we're going to be talking about what market to invest in. And this actually comes back to the three-factor alignment. Now, we have not revisited this for a while now because the first part of this section really focused on the goals. Then we got into the equity optimization and portfolio analyses. Well, now it's time to come back and do the other two concentric circles on the three-factor alignment. So remember, the whole goal of the three-factor alignment is get your goals, the market or markets you're investing in, and the strategies you're using, and find that sweet spot where they all overlap. That's the win for you. All right, so what's the right market? Well, from a high level, it really depends. And, like most investors, my very first question when I got into real estate investing was, where do I invest? Do I invest locally or do I invest out of state? Now, some of you are in very, high-priced markets where it's really hard to cash flow. Some of you are not. So it's going to be very contextual to where you're living in. But this really is a loaded question and a question with lots of potential, but also lots of potential consequences. So a mistake I see a lot of investors make is they get very tunnel vision on numbers, on spreadsheets, or on a website, or on the MLS, just in cheaper markets. Oh, wow, these houses are so cheap here, or wow, this cash flow is so amazing. Now, I'm not saying don't look at that. You definitely want to, but that's not the only factor to look at. Remember, investing is half science, half numbers, and the other half is art. So my high-level recommendation is to default to where you live to invest. Now, why do I say that? Well, I've gone through a lot of iterations myself, and I've worked with hundreds of investors. Some have been my clients, a lot have been not. And I've met investors who have successfully invested out of state, and a lot who have not invested out of state. Actually, in fact, I've had a lot of investors who invested in a different market, and after a couple years, things have not worked out. They have sold those properties and brought their equity, brought their money back to our local market here to invest because they know the local market. So keep in mind, it's a matter of when, not if, something goes wrong in real estate. When, not if. You will have a tenant cause issues. You will have something go wrong. You will have a property manager do a poor job. You'll have a team member do this, blah, blah, blah. Like, it will happen. So I want you to be prepared for this because it is a matter of when something happens, not if. And so when something happens, do you want to leverage your local knowledge, your local network, and the ability to drive to a property, usually within an hour or two is kind of that common window for what is a local investment. And it's very hard to beat all that local information. So I will say there's one major exception to where out-of-state investing can make a lot of sense, and that is if you have a competitive advantage. And a competitive advantage is something that is more than just going onto Google and searching for turnkey rental properties in this market or wherever it is. Like, that is not a competitive advantage. You are long distance, you don't have the local knowledge, you don't know the team there. Now, I'm not saying you can't go do that, but it requires a lot of investment, a lot of time, and usually quite a few airplane rides or many hundreds of miles of driving. And the investors I know that have successfully invested out of state, they've either put the time in and taken the black eyes, or they've been able to leverage a competitive advantage. Well, since most investors can't spend a year or two of investing tens of thousands or hundreds of thousands of dollars in learning cost and flying on every couple of weeks, I really focus on having a competitive advantage. So some examples. You have a family member that is a general contractor in that market. You have a really good friend, and I should put a good friend that you trust. You have a really good trusted friend that invests in real estate and help guide you, or you can invest alongside him or her. You're originally from that market. You grew up there. You went to college there. You have strong roots there. You have intimate knowledge on there that, again, I can't get by just going on to Google, because There's way more than just population growth to see if a market is good or not. The other thing to keep in mind is that if you're investing out of state, plan and budget time and money to go out there and visit it a few times a year. So, a lot of the markets where it has amazing numbers usually don't coincide with, destinations for family vacations or areas that people want to travel. Now, if you have family there, again, different story. However, this is a great opportunity to mix some pleasure, some fun with investments. And this also brings up some opportunities for some potential tax write-offs while you're traveling to that market or the property. But of course, check with your accountant, because I am not giving you a tax advice, but I know many investors have done it, and I have done it myself. Now, again, it may depend on what type of strategy you're using, because traditionally a lot of people invest in a very low price market for high cash flow, and it usually is not a place they want to go travel to. But if you live in the Midwest or you live in the mountains and you and your family love going to the beach a few times a year, well, then maybe buying a short-term rental, which is one of the strategies, we'll discuss that in a few modules, buying a short-term rental in North Carolina or Florida or wherever you want may be a good investment because you can mix some pleasure and business in there. So here's my investing philosophy. And again, this is just, I am almost a decade into this. I'm just kind of sharing where I'm currently at with my time and my resources. I'm not telling you what is right or what is wrong. I'm just sharing my experience. So take it with a grain of salt, of course. So I invest in my backyard. I think within probably a 20-mile radius, all my rental properties are at currently, and it's a high portion of my net worth. So I invest in my backyard, which is Denver, Colorado, and I'm open to investing other markets nearby. But right now it's all Denver, Colorado, and I can drive to all my properties within, if there's no bad rush hour, 40 minutes or so. Now, I do invest out of state occasionally, but I do this via a partnership or syndication. And that is where I am not actively investing in the market, or I'm actively buying a rental and managing it myself or hiring a property manager. I'm investing money with a trusted friend or a trusted operator to go out there and run the project. I'm merely just writing a check to be part of the deal. Now, that is a more advanced strategy, and I spent the first 5, 6, 7 years of my career only investing where I lived, which was originally in Reno, Nevada, and now the majority of it is in, or actually all of it now is in Denver, Colorado. So again, that's my approach. I invest in active rentals where I live, and I'll be more partnership or passive investing for out of state. So here's your action. Really spend some time and just start thinking about what market is right for you. Where do you currently live? And again, go do some basic market analysis there. I'm not a big believer in doing a heavy research analysis on a market, because I think just where you live or where you have a competitive advantage makes a big difference. I think that is the most important factor of everything when it comes to investing in real estate. Now, do you have a competitive advantage anywhere? I personally don't. All my eggs are basically here in Denver, Colorado, and now I got some other surrounding cities that I have a lot of knowledge and good network in. But I'm a full-time realtor. I'm a full-time investor. My knowledge of the market, the news I follow, the people I know, the streets, the properties, the numbers, it would be almost impossible for me to go out there and replicate that in another market. Again, that's me in my situation. But do an analysis for where do you have a competitive advantage? And are there any markets that you want to travel to that overlap with your strategy and goals as well? And of course, as you're doing this, make sure you're talking with your team members. Make sure you're talking with your spouse. Make sure you're talking with your partners as well, because as with all real estate investing, this is typically a team sport.